Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 15th of March. All right, now as we come into the start of the week, the Asian session sort of just kicking off. It's a good idea to have a look, see where the momentum and why the currencies are where they are right now. Now, equity markets, okay, it's a little bit of a weird one, right? So we've got the NASDAQ, which is the real sort of been the driving force in the equity markets since the pandemic sort of broke a year ago. The Dow Jones up 0.9 and consequently, funnily enough, NASDAQ down almost 0.9. So a little bit of a sort of tricky one there is trying to work out, what's actually happening in the underlying sort of equity markets, a little bit sort of mixed. Now, we had the key data on Friday was the Canadian employment numbers. Now, exceptionally good numbers. The unemployment down, employment change extremely right up there. It was a huge, pretty big move. I was going to say, I don't want to get too carried away on Monday. It's a pretty good move, right, on dollar CAD. Now, the volatility around that release, it's not an easy trade, so I don't think you just missed it. But you know what? Dollar CAD, those strong Canadian numbers go with that stronger oil price, which sort of leads to a lower dollar CAD, right? So it looks easy sometimes on your chart. So as I said, don't beat yourself up if you missed it. But don't forget, every second month, the Canadian employment numbers come out the week after the non-farm payrolls. And it can be a really good trading opportunity when they are by themselves. So that's what we saw there. I know a few traders cashed in on that one. Nice to see. Now, with the rest of the pairs, right, and just come back to the main page. I was saying this the other day, that the move in the Treasuries, right? The Treasuries don't just sort of move and just go up and down like currencies like this. Okay, that's not the way the yields sort of generally behave. And if you're looking at the yields the last couple of days, they're going up still, right? And we're sort of talking about this last week. We had the US CPI numbers sort of diffuse things somewhat. We saw the dollar index sort of dribble lower, okay? And, the Treasury yields sort of backed off a touch, and it was ECB were a bit confusing as well. So the dollar index itself got really diffused as far as direction goes. That upside momentum sort of really dissipated, but we do have resistance here now, sort of a new short-term resistance line to focus on, and the Treasury yields are still going up. So in my eyes, the dollar is still going to come back. And it can be a little bit baffling sometimes when you're looking or trying to read the news and work out what's going on. And you're getting things like this: dollar rises with Treasury yields as economic prospects rise. Now, you will know if you've been watching the screens long enough, in 2 days' time, they'll flip that story over and they flip it back just to fit the picture. But the underlying picture is the Treasury yields are still edging higher. The Fed seem very comfortable with that, even though that has consequences for housing prices and other things in the market. At some stage, they'll have to do something. But right now, they're not doing anything. Okay, and we don't expect them to do anything. So then the rest of the news is, Myanmar, there's massive trouble there. Obviously, Biden's vaccines and et cetera, et cetera. But the main thing is it's the Treasury yields which are causing things to move around, right? Give the dollar an underlying bid tone. So I expect it to come back. I'm surprised with this move in the Treasury yields back up to 1.625 for the 10-year. I mean, the 30-year up to 2.378. I'm surprised the dollar isn't already higher. And if you look at the volatility index, right, it's down back towards 20. This tells me that the market is super comfortable with everything that's happening at the moment. It's very relaxed. So the moves that are happening now are sort of being part of the market. They aren't anything unexpected, creating extra volatility. So I'm looking across the pairs here, and you've got to start thinking, well, if the Treasuries are going up, you've got to expect the dollar to start moving higher. And when you're looking across, I'll come over to the major currency pairs. If the dollar's going up, we've got some opportunities here. Redraw your trend lines. You're looking for, as I said, dollar strength. You're seeing that across the board here. Dollar yen's already a bit higher. Dollar CAD's being crushed primarily with those Canadian employment numbers, right? But that number's now been factored in. The currency's down at 124.71. If the dollar starts coming back, and probably more importantly as well, if oil started falling, well, then we're going to start to see dollar CAD squeeze higher. Or if, it's sort of, once again, it's been pulled from pillar to post dollar CAD because of that sort of relationship with oil, US dollar and Canadian dollar. Now, I still like euro. I mean, I think I must be a perpetual bear on euro, but it has now squeezed to the top side. Market's been flushed out. We've got some new sort of short-term trend lines. Dollar strength, we've got to start to be looking for. I still like euro back down towards 117. I thought we might see it by this week, but completely diffused last week with the Treasuries sort of bouncing around after the US CPI and the ECB. Now, sterling still, there's this massive euphoria around the vaccines and rollouts. I think they've got 50% of the population done. We'll have to see how that rolls out, but they're expecting like a lot of economic growth and everything to go back to normal in the UK. If it doesn't, sterling comes off because that's fully factored in my opinion. The Aussie and Kiwi, well, they're just sort of bouncing around here. We're waiting to see what the dollar does to give them direction. At this point, there's not like something hugely tangible that you can sort of, put all your dollars into, basically confidently. So we've got some action here. We know generally where the trading direction is coming from. As I said, it's got to keep an eye on the Treasuries. The yields are still edging higher, prices down. So that's got to give us an underlying bid tone. Now what you do is you come back and have a look at the fundamental releases for this week and see if you can find anything substantial that's going to really sort of get momentum rocking. And there are quite a few things, right? So as you sort of scroll through, even having a look today, I mean, there's some Chinese numbers there which may come into play for the Aussie and Kiwi. We haven't seen that connection of the data of late, so just keep an eye on it. ZOO, economic sentiment and current conditions, really good number for euro. I'd love to see these numbers come in, these numbers come in exceptionally weak. I was going to say, I'm pretty confident to get short, just because they do have an impact, and those sort of sentiment numbers are really ones that get the market rocking. Now, we do have some good numbers coming out this week. Retail sales figures in the States, right? Early in the week gives us an early lead into the dollar. Have to keep an eye on that. And then as you sort of scroll down through the week, we've got, got some key central bank activity. You've got the Bank of Canada. Now, this is the inflation numbers and the CPI numbers out of Canada comes right on the back of the Canadian employment numbers, right? So if you're connecting the dots, if we get really strong inflation, we've just had exceptionally strong employment numbers. Well, you know what? The Bank of Canada may have to start doing something sooner than later, right? So that's something to keep a very close eye on as we go into Wednesday. Don't forget, we've got the Fed, okay? This is the main event for the market every sort of 6 weeks. No change of rates expected, but we'll be watching very closely for any comments from Chairman Powell to see how that impacts. And that's going to roll through into Thursday. You've got the Aussie employment numbers, right? But more importantly than that, we've got the Bank of England also coming out with their meeting, see what they've got to say. It's probably a bit early for the Bank of England to be doing anything whilst these vaccines are being rolled out. But that sort of follows very closely on the heels of the Fed, obviously. And as you come down through the rest of the week, well, that's pretty much all she wrote. Get some Canadian retail sales figures there to end the week. That's going to be pretty interesting as well as we go through this coming week. So the Fed, massive event. So just be aware that's going to dominate the news come sort of, you get into Tuesday, Wednesday, it's all going to be about the Fed, what they're going to do. Bank of England afterwards. We've got some key macroeconomic numbers coming out as well. Sterling, Aussie, got the German ZOO numbers. So what you want to do is you want to plan your week around some of these opportunities. Now, just because there's data coming out doesn't mean you're getting ready to trade. You need to see what the numbers are, see what how the currencies are positioned technically. And if you're looking at the ZOO numbers, like looking at euro, see if we've got support, resistance. Is there any clear momentum dollar-wise or euro-wise? And then sort of connect the dots from there. Like you just don't rush in and sell because they're weak, because it could be underlying bid tone where it's going up. So understand what you're doing. Prepare your week around what's the core driver at the moment. Okay, to me, it's the US Treasuries back in the game. Keep an eye on what the equity markets are doing, and most importantly, connect the dots with the current macroeconomic data coming out, because the central banks are getting active. We are starting to see inflation across a number of countries. This is a good thing because it brings the market back into normal trading conditions and gives us a chance to really nail some of these opportunities. And when we're talking about nailing them, this is where your skill in doing your analysis, identifying these key entry levels, whether it's support or resistance, a lot of these pairs, that's what we're looking to do, right? Then once we get, specifically if we got dollar direction, all of these instruments become easy to understand which way they're going, and we've got entry levels there as well, right? So that's the key to it. All right, guys, pretty interesting week coming up with the Fed, Bank of England, and a number of other things. So make sure you look after your capital. You want to make sure you've got all your dollars for when these things kick into gear. That's the time to put all the cash in. All right, guys, have a good week. Cheerio.